Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on mutual funds in Nigeria, a beginner's roadmap to smarter investing. What is a mutual fund? A mutual fund, also called a collective investment scheme, is a type of investment created with the purpose of pooling funds from various investors to invest in securities like bonds, money markets, instruments, and stocks. A mutual fund's portfolio is structured and maintained to match the investment objectives stated in its trust deeds. Mutual funds allow subscribers to build diverse investment portfolios without buying individual securities, stocks, and fixed income instruments. A mutual fund can be a proper place to begin if you want to save money for retirement or other goals. How do mutual funds work? 1. Mutual funds are set up and managed by registered portfolio managers with the Securities and Exchange Commission (SEC). 2. Mutual funds are operated by professional portfolio managers who allocate the fund's assets to earn income and or capital appreciation for the subscribers or investors. 3. When you invest in a mutual fund, you purchase units in the fund, either through the fund manager, a stockbroker, or other investment channels. 4. The money invested buys some units equals invested or subscription amount divided by net asset value (NAV) per unit. The NAV is updated and published daily by the portfolio manager. 5. Think of the NAV of a mutual fund like the share price of a company listed on the stock exchange. It goes up or down depending on how the fund's investments perform. 6. There's always a lock-in period in mutual funds. This means you won't be able to take out your funds during this period. Always confirm this before investing. How do you know you are making money from investing in mutual funds? 1. If the net asset value of the mutual funds goes up, the value of your holdings will increase. You can unlock your return by selling some of all your units in the funds. However, for money market mutual funds, the NAV is always fixed at 100 naira per unit. Instead, interest is accrued daily on your holdings based on the overall interest rate of the portfolio. Hence, your investment will grow daily and the interest accrued is paid at the end of the quarter or biannually. 2. Mutual funds can also pay out of the fund's return, like a dividend, to the unit holders. You can elect to reinvest your dividend to buy additional units in the fund or withdraw it. Types of mutual funds by asset classes. Mutual funds are grouped into several categories based on the kinds of securities they invest in, their investment objectives, and the type of returns they seek. 1. Money market mutual funds. These are funds that invest only in money market instruments like treasury bills, commercial paper, and fixed deposits. The rate of these instruments will determine the performance of the funds. While anyone can invest in these instruments, pulling funds together enables the fund manager to negotiate and earn higher rates than an individual would. Due to the low-risk nature of these instruments, money market funds are the lowest-risk mutual funds. 2. Bond or fixed income mutual funds. These are funds that can invest in the federal government and corporate bonds, more long-term assets. A portion of the funds is also invested in money market instruments. Please note that despite the fixed return on the investment instruments, the subscriber's return is based on the performance over a period, indicative, and the return is not guaranteed. It is based on the fixed income interest rates, hence the return can fluctuate. 3. Equity mutual funds. Investment is made in stocks based on the investment policy statements. Equity funds offer high returns but with higher risks. Investing in a share of a mutual fund is different from investing in shares or stocks. Unlike stocks, investment in mutual fund shares does not give its holders any voting rights. A share of the mutual fund represents investments in many different stocks or other securities instead of just one holding. 4. Dollar mutual funds. These are funds that invest in dollar-denominated assets like euro bonds and US debt instruments. Some also invest in US stocks depending on the trust deeds. This can help to hedge against any currency devaluation. This is also recommended for investors with dollar obligations. 5. Mixed or balanced mutual funds. These funds invest in different asset classes, which include money market instruments, bonds, and stocks. The proportion is based on the trust deed. How do you start investing in mutual funds? If you're ready to invest in mutual fund, here are a few steps to consider before you begin investing. Firstly, look up the firm, stockbroker, investment professional, or any representative you are considering working with to see if they are licensed and registered with the Securities and Exchange Commission. You can search on www.sec.gov.ng/CMOS / Secondly, you need to understand your investment objective and the level of risk you can tolerate before selecting the type of mutual fund you want to invest in. You can determine your risk tolerance on your own or with the help of an investment professional based on variables like your current age and retirement age. Thirdly, request for the past performance of the funds. While you want to know how well the mutual funds you're considering has performed in the past, keep in mind that the past performance isn't necessarily the best way to predict how the fund will perform in the future. Compare the fund's past performance along with other factors like how long the fund has been in business, the performance of the underlying assets, and the size of the fund. Fourthly, you need to take extra care to review all the fees a mutual fund charges. You can find information about fees, risks, and more in the mutual fund's prospectus. Finally, using a robust technology platform, a user-friendly mobile or web platform, to sign up to monitor the performance of your investment is critical. This should be a major consideration after the checks are positive. Investing in mutual funds through a good technology platform will ease the redemption of units, which is the withdrawal from the funds, and reduce the time it takes for withdrawals to be credited to your bank accounts. Advantages and disadvantages of investing in a mutual fund. A. Low entry amount. Mutual funds provide investors the opportunity to start investing without a lot of cash. Minimum entry ranges from 1,000 Naira and 100,000 Naira depending on the type of funds and the investment outfit. The amount to top up, e.g. monthly, is typically lower than this. B. More opportunity for higher return. Leaving funds in your savings or current accounts is generally considered safe, but the interest is almost at 0%. Meanwhile, investing in a mutual fund with the same risk profile like money market gives you the opportunity to earn a higher return on your funds. C. Professional management. Investing in mutual funds exposes you to professional help, as investments can be complex when undertaken by people without adequate knowledge or experience. D. Liquidity and trading convenience. Investors can easily redeem their shares at the current calculated NAV minus any fees and charges assessed on redemption on any business day. E. Diversification. Expanding investments across a wide range of companies or sectors can help investors lower risk if the company or sector fails. This is less expensive to achieve with a mutual fund than through ownership of individual stocks or bonds. Disadvantages. A. Fees. Investors in mutual funds bear numerous charges like sales charges, annual fees, management fees, and other expenses, regardless of how the mutual fund performs. To check this, the SEC has capped the maximum total fees to 1.5% of the funds. B. Less control over investment. Investors cannot directly influence which securities are included in the mutual funds. Mutual funds allows investors who do not have the time to invest in the money and capital markets or do not understand the business of buying and selling securities an opportunity to invest and make money. Mutual funds can form a part of your investment portfolio. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.